You are tuned in to the 5-Minute Signal, Business and Wealth. I am Vivian Thorne, Economic Strategist. This is not a finance podcast. This is a blueprint for building and defending your economic fortress. We don't do speculation here. We do strategy. 5 minutes on the clock. Let's get to work.
The news today is written in the order books of the world's largest centralized exchanges, and the message is clear. The vaults are emptying. As we open this Monday morning session, data shows a record $3 billion net outflow from centralized trading hubs over the last 48 hours. This isn't a retail panic, it's a strategic extraction. We are seeing the largest institutional players, the family offices and sovereign wealth funds, pulling their liquidity off centralized boards and moving it into private, non-custodial algorithmic pools. This movement follows the final implementation of the Treasury's new reporting requirements under the Clarity Act, which has turned every major centralized exchange into a high-definition surveillance node. The liquidity that once made these platforms the safest place to trade is now evaporating, leaving behind a hollowed-out infrastructure designed for the masses, while the real power has already left the building.
Why this matters is simple. Liquidity is the lifeblood of your economic fortress, but centralized liquidity is a leash. If you are still holding the majority of your business's liquid assets on a platform where a single compliance officer or a government red flag can freeze your access, you do not own that capital. You are merely renting it. In the 2026 economy, the speed of algorithmic execution has surpassed the speed of centralized settlement. The delay introduced by a middleman, the processing time, the security holds, the compliance reviews, is no longer just an annoyance, it is a structural liability. When the market moves at the speed of light, being stuck in a centralized queue is the equivalent of financial suicide. The sovereign algorithm is the alternative, a self-executing, non-custodial environment where the keys are yours, the execution is instantaneous, and the counterparty risk is zero. The market is shifting from trust us to verify the code.
The hard truth is one most investors are too comfortable to admit. Centralized exchanges are the new banks, and banks are built to serve the state, not the individual. The promise of the digital asset revolution was the elimination of the gatekeeper, yet the majority of market participants have spent the last 5 years building bigger, more sophisticated gates. We have traded the old banking elite for a new technocratic elite, and the results are identical. These exchanges are now so heavily integrated with traditional financial surveillance that they no longer offer a hedge against systemic risk. They are the systemic risk. If you believe your wealth is safe because it's on a regulated exchange, you are fundamentally misunderstanding the nature of regulation in 2026. Regulation is not about your protection, it is about the state's visibility. The moment the macroeconomic weather turns cold, those centralized gates will shut, and your liquidity will be the first thing sacrificed to maintain market stability.
Here is the actionable move to defend your capital in today's session. 1. Audit your custodial exposure immediately. Any asset intended for long-term strategic reserve that currently sits on a centralized exchange must be categorized as at risk. Calculate the percentage of your total business liquidity that is subject to third-party approval for withdrawal. If that number exceeds 20%, you are structurally compromised. Begin a staged withdrawal into hardware-secured, non-custodial environments today. 2. Migrate your active trading liquidity to sovereign liquidity protocols. The 2026 landscape offers institutional-grade decentralized execution that rivals any centralized order book. Stop providing liquidity to the middleman's pool and start participating in peer-to-peer liquidity provisioning, where you retain the yield and the keys. Move your operational capital into multi-signing environments, where no single point of failure can halt your business operations. 3. Establish an emergency exit algorithm.
In a market where centralized hubs can go dark in minutes, you must have an automated trigger that moves your assets from centralized rails to decentralized ones based on volatility spikes or withdrawal latency metrics. Do not wait for a headline to tell you the exchange is in trouble. By then, the liquidity will already be gone. Control of your capital is the only true measure of your economic sovereignty. I'm Vivian Thorne. This has been the 5-Minute Signal. Stay sharp. This program is for informational and educational purposes only. This content is not a substitute for professional, financial, investment, or legal advice. Always consult with a qualified professional before making any financial decisions.